Hey, thanks for joining. Welcome back. Today we're going to talk about one of my favorite subjects, and that is cash and cash flow. Now, there's a lot of different ways of measuring business performance. Today, you've got EBIT, earnings before interest and taxes. You've got EBITDA, earnings before interest, taxes, depreciation, and amortization. And of course, you've got the latest, EBITDA with COVID-19 attached. But we're going to talk about another mechanism that lots of businesses are evaluated on, and that is SDE, Seller Discretionary Earnings. Now, seller discretionary earnings is not the same as net income. Your CPA will try to manage a business's net income and therefore its tax liability, whereas the business broker will try to maximize that net income, or SDE, so that when we go to value the business, we get a higher number and more return in the marketplace when we go to sell it. So SDE is not net income, but it starts with net income. And then we do an exercise called recasting, where we add certain items back to net income and also take some deductions from that number to arrive at the normal operating cash flow of a business. So SDE is essentially a measure of the cash flow that's generated from the business. And it goes something like this: net income plus owner's salary, we add back. A popular one is depreciation, which is a non-cash charge to lower your tax liability. So we add depreciation back. We add back interest expense. You take out a loan, you got interest expense. You put that back into the SDE plus column. And then you have some takeaways. A common one would be interest income. You know, income that's earned by having money in the bank earning interest is not earnings that result from normal operations of the business. If you're paying rent lower than market value rent, you have to add back the difference between what you're paying and what normal rent would be as a subtraction to SDE. And then the other one would be things, non-operating income, like you have a rental property that you're running through the business. The profits that come from the rental company are not normal operating cash flow for the business. So SDE is net income plus your add backs, we call them, minus the items that need to be purified from cash flow that are extraneous to the business. And when you get that, you get seller discretionary earnings, okay? And that's a measure that we use to value the business, because we're going to apply a multiple to that SDE. And in fact, before we do that, we look at a business performance over several years, and we weight the more recent years heavier and the more, prior years less. So we come up with a weighted average SDE, okay? And then apply the multiple, and then we get the value of the business. So that's a quick video on SDE. It's a little bit complicated, but not really if you think about the intuitive nature of what you're doing, just measuring cash flow of the business, okay? And we'll talk about multiple on another future broadcast. So really appreciate you joining. As always, here, if you've got questions, want to know more, or if you have suggestions on future topics, just give me a call. All right. Thanks for joining and have a great day. And remember, cash is king. Have a good one.